What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Tuesday, September 28th. Looking at the indices map, man, is it a bloody day in the market today. But what do we always say? We don't panic, we pounce. We don't hesitate when it comes to sales. If the market wants to give us sales, we're going to take full advantage of that. And obviously, we're going to pick up on the plays we want the most, especially on days like this one specifically, because as you can clearly tell, any indice you look at is essentially blood red. There are a little bit of green spots here and there, right? But for the most part, everything is pretty much on sale, guys. As I told you a million times, and I'll tell you a million times more. Red days are not bad days. These are days you want to spend your money, right? Especially when some of these companies you've been looking at for a really long time of wanting to get into, example, an Apple, a Facebook, an Amazon, take these massive dips. You want to position yourself and take full advantage of these dips and start either looking at entering a position or potentially eyeing where they hit a floor to then enter an effective position at the low point and then enjoy those rides back up. As we've seen from the S&P 500 chart back in March of 2020 when COVID hit and it had that massive dip, where do you think most of the biggest investors put their money into? Into the plays they've been looking at for a really long time. Why? Because that was a massive dip and a massive opportunity to buy low and in the end ultimately sell high, which could either be now as we're going through this now potentially, or later into the year, as usually in quarter four is when you start seeing people start to take profits, especially on those plays that they are really profitable on. Again, it's a psychology thing, right? You have to take what the market gives you. You can't be doom and gloom all the time. You have to take advantage of these opportunities. This is a massive opportunity if you know how to play it right? So a lot of people sometimes say, well, all right, man, how do you play it right? How do you know what you're playing is right? Or how do you know what you're playing isn't going to keep falling like a falling knife, right? You're trying to catch something that's falling and all it's going to do is cut straight through you. It's a good question, right? So specifically in days like this, one of the things or strategies I like to implement, which we're going to talk about in the video today, is specifically switching your mentality to a long play, right? Something you would like to play long or eventually end up being in for a longer period of time. Why? Well, right now, obviously, you don't really want to play a short play because potentially tomorrow we could have another red day like this, and obviously you're going to dip even lower, right? Making your portfolio more red, essentially, than what it already is. So by switching your mentality to playing something long or entering a long position and something you'd be interested in having would be a really good strategy to implement on red days like today, right? So a lot of people may be like, well, okay, I mean, I already have tech. I have some Microsoft. I have some NVIDIA, right? Like, I already have a lot of the things that are hurting today, right? Tech is hurting today. I'll get into that in a minute as to why as well. So specifically, I'm going to drop a play on you guys that I think would be a potential good outlook for the future. Again, this is not financial advice. It's financial education. I'm simply sharing my strategy on how I implement my money and where I invest it. For growth purposes and what I like to get in return, right? To kind of give you an idea of maybe something you could potentially do or maybe something you would like to do, right? Again, every person's different. Everybody does with their money what they choose to. I would never recommend you taking advice strictly from someone on YouTube. Again, the point of the channel and the videos are to teach you guys strategies, right? Like what you guys can do for yourselves if you so would choose to. So let's get into it. This company is called ZIM, right? ZIM Integrated Shipping Services, right? So this specific company is a container or shipping container company, right? They do bulk shipping across countries, right? It's specifically, this company is based out of Israel, right? So first and foremost, before we get into the details of the company, take a look at the chart, right? So what do you see in this chart? For those of you that are new, maybe potentially you don't pick up on these things really quick, so I'm going to try to do the best I can to explain it to you in the simplest terms possible, right? You see this massive uptrend. This company barely started trading essentially in the early parts of 2021. Essentially January 2021 is when it started trading publicly, right? On the stock market. So prior to that, we don't really have a lot of information. But since it started, let's take consideration as to what has happened this year. We had a massive correction in February, and we had another major pullback in May. Well, let's take a look through here. Here's February, essentially through March. You see this run up. April, still running up. May, still running up. So through two major dips in the market, this company has still potentially pushed to the upside. It did have a small pullback here in late June, early July. As you see this little, that's essentially, what is that, less than 10% pullback? Before it went on another massive run all the way up, peaking right here in September 17th, essentially, at this big candle, essentially for the high of 62.20. And then recently pulling back. As you see, the candles are a little bit scattered. To give you a better idea, I'll show you guys real quick. Again, looking at the trend, what do you see? Mostly green, mostly pushing to the upside, right? So now let's get into the specifics of what this company is. ZIM Integrated Shipping Services is under the industrials sector, right? So this is essentially a play you could use to diversify your portfolio, meaning you don't always want to keep all your money into tech. You don't always want to keep your money into financials. You don't always want to keep your money in natural gas, like the play I talked about yesterday, right? This is another sector you could potentially jump into and potentially take advantage of these run-ups. Real quick, before we jump into the specifics of the company, take a look at these financials. Something you guys should look at, or you can look at when you're looking for companies you're researching. See this earnings per share? This is money or profit that the company's making. Take a look at quarter three, $1.24 a share, $1.24 a share. But then look at the next quarter, $3.13. All right, let's look at the next year, first quarter, $5.18. Now let's take a look at the most recent quarter, $7.38. For those of you that may be like, all right, well, what does that mean? Well, what this means is continued growth, right? You see these jumps, it's continuing healthy jumps to the upside as the chart did show us, right? That is super, super bullish in a company, and you always want to try to see strong financials, especially when you're going into a sector you don't really know a lot about. I'm pretty sure none of you probably even know who the major players are in the container shipping industry. I know for a fact I don't. I mean, I know a couple of them, maybe one or two. Because again, anytime you've seen a freight car on the trains, you see the names on the side. Those are the companies that are shipping companies, right? I've never in my life seen ZIM, but from these financials alone, I'm super bullish already. And I already did take a quick peek. So they do have a website. We'll take a look. They do have essentially an investors page for those of you that are interested. Again, this is a shipping company out of Israel. They've been around since 1954, I believe is what it said. Let me double check that actually under the investors page. I think they said, yeah, 1945, excuse me. So essentially around World War II is when this company was fully established. As you can see, they do container ships. They do have routes all over the world. Where was that map at? Let me see if I can find it. Yeah, here we go. As you see, they have routes all over the world that they do. So this is a global company essentially doing shipping for not just Israel or not just Europe, but essentially for Asia, the United States, Australia, the South America. They're pretty much involved in all the shipping globally, right? When we take a look a little bit deeper into this company, they recently had their earnings financials presented, and they did have a beat. Specifically, it was a smash, which was this one right here. They even offered a $2 dividend, which is even another bullish sign. When you see a company start offering a dividend, that's telling you they have so much money they're even willing to give it out to people that are willing to invest in them, to try to attract more investors. That's a good sign in a company for those of you that are new to the market. There was an article released in Seeking Alpha speaking about them specifically and how they had smashed their earnings and their growth potential was exponentially growing. It did also list them as one of the major players in the freight industry, which specifically, where was that piece? Oh, here we go. If you consider the giants like Maersk and Hapag-Lloyd to be UPS and FedEx, then ZIM is more like DHL or XPO. It's basically telling you they're not the biggest player in this industry or in this sector, but they are or do have a major piece of the pie essentially going to them, right? With the cost of shipping being astronomical, if you guys have been paying attention to the media or the news media that like to report news, you might have heard them say you might want to start buying your gifts early because of shortages, right? Because again, this whole chip shortage has caused strain in a couple different sectors. So they were saying that shipping costs have increased dramatically, making things a lot harder to get, so you should plan ahead, right? I know that was a couple articles. You can go digging through MSNBC for that. What I wanted to see in this was also the latest one-year freight. So this is the cost of freighting or freight shipping over the last 12 calendar months. As you see, steady uptrend to the upside. If you compare that to their chart, it matches right along, right? I don't know about you guys, but I don't see shipping being any less or being renovated or renewed to something dramatically new, right? Not at this time anyway. So for current times as we sit today, things still need to be shipped on containers. that isn't going to change anytime in the near future. As you do see here, an estimated fair value is 70-ish. Well, currently we're sitting at, essentially as of today, 53.37. So to kind of sum up the video, Yahoo Finance, I'll include it in the description of my video, does have a lot of good info on it as well. They are super bullish on this. Midterm, they are bullish. Long term, they are flat, essentially giving you the prospectus that potentially this has a potential to keep climbing up. As you see here, the 1 year target for them is at 67. So now you have one rating at 70, one rating at 67 from two different areas. Wall Street Journal, I couldn't find one, but I'll keep digging and either update you guys on Twitter if I do find any additional ratings. Again, this company is relatively new, having started trading January 28th. Lucid did not show any short position established against them, which was also a good sign, right? And then our favorite tool, as always, unusual whales. Looking at the whales to try to see what the big players are trying to do. Obviously, you see some pretty large buys. 242,000 on a sold put. Essentially, this is bullish, but this is at 43. Again, we're trading at 54 or 53 as of today, or after hours. You see this buy call at $38. This was for 338,000, 26,000, 101,000, 73,000, 101, 73. As you see, these are not small pennies here. We're talking big players throwing big money down bullishly on the specific play. Specifically, you see call premium today was 2.5 million compared to 1 million in put premium. And if we take a look at the breakdown of the charts, take a look at these nice, beautiful pie charts. Look at all that green. All that green means money. Money, money, money. Nice and bullish on all aspects. Looking at the specific expiration dates, what do we see? October 15th is being targeted heavily with 693 million calls over puts. As you see, puts are at 406 million. Looking at the expiration date of January 2022, you see 806 million compared to 474 on the puts. Now, what specific strikes are they targeting? Well, let's take a look. You see the 38, as I did show you just from the flow real quickly. There was a lot of plays on 38, 43, 53, and 60. So again, the 38 and the 60 being the two highest targeted strikes. Again, all calls over puts. Again, another bullish sign and sentiment to this play. So this kind of gives you an idea, right? If the market's going to give you lemons, it's okay. We'll just make some lemonade, sip it, and enjoy the ride. Because obviously this is a long-term play. If you were to choose to enter this position, obviously you could enjoy a nice little run-up in an options play. I did also take a peek at that, specifically for my option players. Looking at the October 15th strike date is something I would be a player in, or potentially this January. For the October 15th, for those of you guys that are interested, I would potentially be a player at this $53 strike, as you did see the 60 was a target. At 53, you're at 0.55 delta, earning $55 for every $1 ZIM does go up, and also giving you yourself a 55% chance of being profitable. At the $50 strike, you're at 0.71, which is not too shabby. And at this price, 450 to 500, you could easily submit a bid at 475 and potentially get accepted, and enjoy literally $71 run up on every single dollar ZIM goes up. If it did hit that 70 target, I mean, you're talking about nice money there at that point, right? For someone who's a little bit more comfortable giving yourself a little more time, again, going into the 53, I would be a player. Even the 55, the 50 looks kind of nice. These prices, though, I would probably say best bet for me personally, I would go with the 53 at the 630 to 720. You could easily, that has a nice little spread on it. You could probably get away with 675, 680 bid, get accepted, and be enjoying $57 on every single dollar ZIM does go up. So, as you guys again did see, the ticker is ZIM. If anybody wants to take a look at it, if you have any questions, leave them down in the comments below, guys. As always, don't forget you can always hit me up on Twitter and IG. Otherwise, I'll catch you guys in the next one. Don't forget to like and subscribe. It is appreciated.